We now have $170 billion of dry powder available to invest.
Meet BlackRock, the asset management giant with over $9 trillion in assets. From tech to healthcare and even governments, this powerhouse influences markets worldwide. Let's dive into how BlackRock came to own so much power. So what does BlackRock actually do? In simple terms, BlackRock manages money. Unlike banks that lend or hold deposits, BlackRock is an asset manager, meaning that it takes money from its clients, who might be governments, pension funds, large companies, or individual investors, and it invests it in various places with the aim of making more money. They spread these investments across a range of assets like stocks, bonds, real estate, and alternative investments, hoping to grow the value of those funds over time. When BlackRock makes these investment choices, it doesn't just affect the companies it's investing in. Because of the enormous sum it manages, it has the potential to move markets and impact the economy as a whole. One of BlackRock's standout products is its range of exchange-traded funds, or ETFs for short, which are investment funds traded on stock exchanges, like stocks themselves. Through its popular iShares brand, BlackRock offers a variety of ETFs that let people invest in large portions of the market or specific sectors without picking individual stocks. ETFs are especially appealing to investors because they're usually low cost and they allow easy diversification, meaning investors can spread their money across many areas with just one purchase. The iShares ETF has become wildly popular, not just with individuals but also with large investors like institutions and governments. This popularity has solidified BlackRock's position in the market as the company now controls a vast portion of the ETF industry, which further extends its reach and influence. But how big of an influence does BlackRock really have? Well, it's massive. Managing over $9 trillion means that BlackRock has a larger financial footprint than the GDP of nearly every country in the world. When BlackRock decides to buy or sell a significant stake in a company, that decision can directly impact the company's stock price, affect market trends, and even influence entire industries. For instance, if BlackRock increases its holding in renewable energy companies, it's not just supporting a green industry, it's sending a signal to the market that renewable energy is a good investment, potentially influencing other investors to follow suit. Similarly, if BlackRock holds major stakes across different sectors like technology, healthcare, and finance, it has a say, however indirect, in the future direction of these industries. BlackRock's influence doesn't stop at market investments. Thanks to something called cross-ownership, BlackRock holds stakes in many of the largest corporations across various industries, giving it voting rights on major decisions in each of those companies. This means that BlackRock gets to vote on issues like executive pay, mergers, and company policies. Essentially, BlackRock holds a small piece of the steering wheel for several of the world's most important companies. While BlackRock isn't usually interested in the day-to-day operation of these businesses, it can push companies to follow certain principles or long-term goals, especially on issues like environmental policies, social responsibility, and corporate governance. Imagine a company with the power to push giants like Google or ExxonMobil in one direction or another. That's the scale of influence that BlackRock has. A big part of BlackRock's success and influence comes from its technology. The company developed a powerful risk management and investment system called Aladdin, Asset, Liability, and Debt and Derivative Investment Network. Aladdin isn't just a software tool, it's a sophisticated platform that helps BlackRock and its clients understand risk and manage assets. Aladdin tracks global market data, assesses financial risk, and provides detailed analysis, which is crucial for making informed investment decisions. But here's what's even more interesting. Aladdin is not exclusive to BlackRock. Other financial firms, including some of the biggest banks and insurance companies, use Aladdin to manage their investments. This broad adoption means that Aladdin's influence extends throughout the financial world, guiding the investment decisions of countless organizations globally. When these companies use Aladdin, they're relying on BlackRock's system to shape their understanding of risk, ultimately making BlackRock's influence even larger than its own portfolio. Another reason for BlackRock's immense power is its close relationship with governments and central banks. In times of economic crisis, BlackRock has often been called upon to help with financial interventions. Take the 2008 financial crisis, for example. When the US economy was hit hard, BlackRock was hired by the government to manage toxic assets, risky investments that were threatening the stability of the financial system. The government trusted BlackRock to help stabilize the market and manage these assets because of its experience and risk management expertise. For instance, if BlackRock reduces its investment in companies that heavily pollute or don't follow good governance practices, it pressures those companies to change in order to attract investment. However, not everyone is convinced that BlackRock's commitment to ESG is entirely genuine. Some critics argue that BlackRock is simply responding to public demand for greener investments, rather than making a real commitment to sustainable change. They suggest that BlackRock might be more interested in promoting a positive image rather than fully committing to the principles of ESG. BlackRock's involvement isn't just in developed markets, it's also a significant player in developing economies. Through its investments in infrastructure projects and real estate, BlackRock supports economic growth in regions that need it the most. By investing in transportation networks, energy infrastructures, and even urban development projects, BlackRock contributes to the long-term growth of emerging markets. This is especially important in countries where private investment can be a catalyst for economic stability and modernization. However, some people raise concerns that BlackRock's investments might be focused on generating profits than on benefiting local communities. There's a debate around whether large investment firms like BlackRock are truly helping these economies or if they're prioritizing their financial goals over social and economic welfare. The story of BlackRock's growth and influence wouldn't be complete without understanding the man at its helm, Larry Fink. Starting his career as a bond trader, Fink experienced a major setback early on when he lost a significant amount of money on a deal, a failure that inspired him to make risk management a core part of BlackRock's business. This focus on managing risk led to the creation of Aladdin and shaped BlackRock's approach to investment and client trust. Under Fink's leadership, BlackRock has become a global powerhouse. Fink is known for his annual letters to CEOs, where he outlines his vision not only for BlackRock, but also for the broader market and society. He believes that companies should be responsible for more than just profits. They should be contributing positively to society. This perspective has helped shape BlackRock's identity and influence, making it a company that is focused on social and environmental issues as it is on financial success. While Larry Fink is the most visible face of BlackRock, he's not the only key figure behind its success. Rob Kapito, the company's president, has been crucial in driving BlackRock's expansion and ensuring that its strategy adapts to changing markets. Kapito's efforts have supported BlackRock's global reach and have helped solidify its position as a trusted partner for clients around the world. Together, with a strong board of directors and executive team, BlackRock's leadership brings diverse expertise that strengthens its position in various sectors. This leadership team is not only focused on maintaining BlackRock's success, but also on navigating the complexities of being one of the world's most influential financial institutions. BlackRock's story is a powerful reminder of how one company's decisions can ripple through economies, industries, and ultimately individual lives. As BlackRock continues to grow, the debate around its role, whether it's an essential force for good or a private entity with too much unchecked power, will undoubtedly continue to evolve, leaving us to ponder how much influence is too much for a single company to have. If you enjoyed this video, make sure to like, subscribe, and hit the notification bell so you don't miss out on any of our latest updates. And do let us know your thoughts in the comments section. We'll see you guys next time.